So you're thinking of moving to Salida, Colorado? Well, in this video, I'm speaking with Jess Fisher, a local mortgage broker in Salida, and we're going to be talking about the housing market now and into the beginning of 2025, as well as mortgage rates. And you're going to want to stick around until the end because we're going to talk about some really good tips for both buyers and sellers who have been waiting out this market to see, what decisions to make next. If this is your first time to the channel, welcome. Be sure to subscribe to get local insights into the Salida, Colorado market, and be sure to hit the bell for notifications for the next time a new informative video becomes available. My name is McCarthy, a realtor that specializes in Salida, Colorado and surrounding areas, and I get calls all the time from people just like you looking to move here. So whether you're thinking of moving here in a few weeks or a few months, please reach out to me. My contact information is below, and I'd be happy to help you make a smooth transition to the Salida, Colorado area. Okay, let's talk about the housing market and local mortgage rates with Jess Fisher. Thank you for being here today. He is a local mortgage broker and will be giving us some insights into what's going on with our mortgage industry right now. So we're filming this the end of November 2024, so the U.S. election has ended. That was a giant question mark for the market for basically the last part of this year, right?
Yeah.
So now that that's over, what are we looking at? What's going on?
Yeah, right now, mainly what we're seeing is, prior to the election, there was a lot of kind of waiting to see how the election was going to turn out. Now what we're seeing is a almost kind of a wait and see period to see how the new incoming president and how those policies shape, in this case, the mortgage market and the housing market, how it impacts it. Yeah. So one of the things that's kind of nice, we've seen a lot of volatility with rates over the last few years.
Yeah.
We're seeing more of a stabilizing of rates right now.
Okay.
They're moving up and down a little bit. But the impact of kind of bigger swings that we were seeing before, we're not seeing that right now.
Okay.
So that is a plus. I mean, I think everybody would like rates to come down more.
Sure.
But they're holding pretty steady. And again, 1/8% to 0.5%, kind of above or below a line is kind of what we're seeing as far as rates moving right now.
Okay. That's good because if you're a buyer and you start looking for a house 1 month and you don't find it for several months, the way it was before, you might not qualify, right? Because it's changed so much.
Yeah.
But now buyers can have a little bit more worry less, I should say, about not being able to qualify for that house anymore because the rates are just slightly moving, not drastically moving.
Yeah,
right?
that's correct.
Okay.
Yeah.
So where are they right now?
They're in the 6s right now.
Okay.
And so I'm seeing people that are really optimistic about the future.
Okay.
Taking a little bit higher rate to take advantage of the lender credit.
Okay. Explain more about what does that mean?
So, there's a rate sheet. So when you see online or whatever and you see, rates right now are at 6 3/4.
Okay.
Well, that's what we call par. In other words, the lender's not giving any credit necessarily, and there's really no cost to the rate because you can buy down the rate to 5% or lower if you want.
Okay.
But there's a cost to buy that rate.
Sure.
If you take a higher rate, the lender will actually pay you in the form of lender credit to take the higher rate.
So you can put that towards your down payment.
Yep. So you can put that towards closing costs.
Closing costs.
Yeah,
okay.
Closing costs. You can put it towards closing costs. And so some people are taking that higher rate to take advantage of paying for closing costs. The fact that the rate is higher, it may add $50, $100, $200 to the mortgage.
Okay.
But they're willing to pay that because they're getting thousands of dollars towards closing costs.
Sure.
In anticipation of rates lowering and being able to refinance in 6 months, a year, something like that.
Gotcha. Okay.
Yeah. Yeah.
But they're doing that in the hopeful, but they are also still able to pay that. So the mortgage that they're locking into is not going to stretch them so much that if they can't refinance later, they'll be okay.
Yeah. My rule of thumb is generally speaking, depending on the borrower, but my general rule of thumb is if you're comfortable with the mortgage payment for 2 years and you are optimistic about the future, then that may be an option for you.
Yeah.
And then also, if you're taking a higher lender credit, having a 4-year window to where you would take a loss on that credit. Because let's say you get $5,000, $6,000, $7,000 in lender credit and your mortgage is only increased by $100.
Okay, that's not too much.
It's not too much.
Yeah.
So when you extrapolate out paying an additional $100, 48 months means you've paid an additional $4,800 on your mortgage. Well, if you got $6,000 in lender credit, you're still coming out $1,200 ahead.
Totally, yeah.
And so it's kind of a different way of looking at the numbers.
Yeah.
And my point isn't to get too far in the weeds with that, but more to make the statement that a lot of the buyers that are coming in that do have means are optimistic about the future.
Yeah.
Yeah. So like kind of a general consensus.
That makes sense. And to secure the house now. So you're not waiting and holding on to that money if you have it for the down payment or whatever. If you qualify now, then they make that decision now rather than just waiting.
Yeah.
Securing it, right?
Yeah. So, I mean, ultimately at the end of the day, you don't want your dream home to slip through your fingers.
Totally.
And if right now you find your dream home and you can afford the payment, then why not go ahead and secure it?
Absolutely.
Because if rates go higher next year, which just for clarity, none of the major mortgage companies are predicting rates to go higher.
Okay.
But let's say they do go higher.
Yeah.
Well, you got it in a good time because your rate is at 6 something percent.
Sure.
You know, they go up to 8, let's say.
Yeah.
Let's hope that doesn't happen, but it's possible, right?
Sure.
And if rates go down to 5, then you refinance. So don't let the home get lost because you're trying to nickel and dime rates.
Yeah.
Is it kind of a general?
That makes sense.
Yeah.
And I guess we'll get a little bit more into kind of tips for you as a buyer moving forward. But so, we talked a little about the stabilization piece, but let's talk about, what can affect mortgage rates. It's kind of this, like, people I feel like know that mortgage rates matter in buying a house, but besides that, there's so many variables that affect them.
Yes.
So we just have a new president-elect who has ideas that may or may not affect the market, but like in reality, what actually affects the mortgage rates?
Yeah, great question. Probably the closest tie to mortgage rates, if you're going to think of kind of a benchmark or something that tracks, is the 10-year Treasury bond.
Okay.
The yield on that kind of tracks with that.
Okay.
So the bond market affects mortgage rates.
Okay.
Geopolitical environment affects mortgage rates, as well as buying and selling demand.
Okay.
Affects mortgage rates. And those are kind of the three big ones that really drive mortgage rates, and kind of makes them go up and down. Gotcha. That's going to be the cause of some of the biggest swings in mortgage rates.
Gotcha. Okay. So with our crystal ball that we don't have, what are we thinking? What are you reading about as a better way of asking that question for 2025? So we're kind of end of Q4 right now of 2024, but a lot of people are thinking, let's wait till spring, rates might go down. Mm-hmm. We'll know what's going on more by then. What are people even thinking?
Yeah, so again, I think the general population that I deal with in buying homes, they all seem optimistic, some cautiously optimistic, but there's some certainty in their optimism, right? Because they are putting their money down and taking a higher rate to have some of those closing costs.
Sure.
So that's one indicator. You and I and the average person doesn't control mortgage rates, but that's the general consensus of just the population.
Yeah.
When we look at like Fannie Mae and some of these other big like lenders, generally speaking, they're saying 2025 rates anywhere from 6 itself down to 5 3/4.
Okay.
And so, if we look back to what the predictions were a year ago about 2025, they were even more optimistic. And so they're kind of walking back some of that optimism.
Yeah.
So I would say more it's cautiously optimistic.
Okay.
Right now as far as what rates are going to do. And there's a lot of things that can impact it, in particular with some of the sweeping policies that are potentially going to come into effect.
Sure.
And so that could have an impact on it. So they're kind of walking that back a little bit to see what it's going to be like.
Okay.
But across the board, lower rates.
Lower rates, cautiously optimistic. Okay.
Yeah, and not big drops and not huge drops in rates, but a consistent downtrend. And since Q4 2023, we were at 7.5, 7 3/4,
close to 8. Yeah.
Close to 8. Depending on where you're buying and what you're buying. Mm-hmm. And we've been seeing a downtrend. So the mortgage market's just like the stock market. Nothing goes straight up and nothing goes straight down, generally speaking, right? So it's just going to kind of bounce around. So not getting sucked into the short-term trend, but looking at the longer trend, we are seeing a decrease in rates. So that's a positive overall.
Totally, yeah, because we did a similar video a year ago, and that was, I mean, we were close to 8 at the time, and we were optimistic for 2024, and so here we are a year later. It has gone down, not huge, but enough to where it makes a difference in people's pocketbooks this past year, for sure.
Yeah, it's definitely made a difference. It also has become cautiously optimistic because there are some of the things that geopolitical events, et cetera, that have caused rates to jump back up. So we're still in that environment where we're kind of whittling away again at some of those bigger jumps that we saw this year.
And there's just so many unknowns in our entire world.
Right?
Yeah, which we won't get into today, but we're cautiously optimistic. Okay, I like that. So that's what we can expect for Q1, Q2. Then let's talk a little bit about if you are looking to buy right now, or even sell and then buy, because I know there's a lot of people who still, they have that really low mortgage rate that they locked in. They're not sure, but life happens. They need to move for whatever reason, or they just decided they don't like their house anymore. So whatever it is, you have your reasons why you need to sell. So for those people, what kind of tips do you have on, right now, end of November into the end of this year, and then all through the beginning of 2025? What should people be doing to prepare?
First and foremost, I know we say it almost every time, but get pre-approved.
Absolutely.
So being able to get pre-approved, so that way you know where you stand.
Okay.
And then also find an agent. And start that conversation. I think if some people want to wait, right? Because they believe rates are going to come down, so they're going to wait till the spring. I think that's a valid idea, but at the same time, I wouldn't give up between now and the spring.
Yeah.
And so getting pre-approved, getting an agent, have an agent, send you the listings, because your dream home might be in there.
Yeah.
And in the off season, sometimes we can, find some better deals.
Absolutely.
For homes that have been sitting on the market, for super long, or just not getting enough buyer traction. So buyers that come in sometimes in the off season can, find some benefit in that.
Yeah.
So still keeping your pulse on the housing market and still looking, but I understand if people aren't wanting to go out and look at 5-10 showings in a weekend and, going every weekend. Because they kind of want to wait. But I would say still keep your eye on the market.
I agree. Yeah, that's kind of what I've been advising my clients too is, okay, here are some lenders. Jess is one of them. Call, get pre-approved, find out what's going on, and then let me get you on a home search that's customized for you and start looking. I have some clients that aren't in a big hurry right now, but they've seen a handful of houses, and so it kind of gets them just a better idea of what's happening in the market, and then they're ready to pull the trigger if they see that one house, And like you said, this market, particularly in the Salida, Colorado area, our inventory is starting to go down. It's the winter, fewer houses come on the market, but the houses that are there tend to have more motivated sellers. So you often have a bit more negotiation power right now. In the spring, that might change.
That's something we can talk about because there are some predictions that there's going to be 900,000 more homes sold in 2025.
Wow.
And so if
compared to 2024.
Yep. Okay. So if that's the case, then there's going to be a lot of buyer demand.
Sure. And we're in an area where that's the trend. I mean, our buyer demand has not gone down in our beautiful mountain community. No. So if you watch any of my other videos, you know that this is a great place to live, and that demand is not going away.
No. And so if there's way more demand, buyers are going to have less leverage in the deal.
Yeah.
And so you may be paying full price versus, getting a discounted rate, or you may be having to, go over asking price.
Sure. Yeah, which we haven't quite seen it, but I am starting to see, especially for well-priced homes and more desirable areas, we're starting to see some multiple offer situations, and, it just depends on the house, but it's happening some, but I was telling my clients the other day, you know, you might be in a situation where you have to make a decision that day and you want to see it like right away versus, oh, I'll see that next weekend and think about it for a few days. And that's what we're, you know, that might change, right?
Yeah, it may change, and that's where the pre-approval is so
Absolutely,
important.
yeah.
So important.
And also, so when you're getting pre-approved, you pull their credit and get an insight into, you know, if there's a blip on their credit, you can clear it up sooner, right? Or identify.
Yeah, and it does happen. Actually, I just locked a loan yesterday.
Okay.
Where I always walk through the credit report with the borrower.
Okay.
Because sometimes there's surprises on there. And
Totally.
there was a surprise on the credit report that it didn't change the loan, but, you know, the borrower's like, I don't even know what that is.
Sure.
You know, it's like, okay, well, here's the contact phone number. We have a little bit of time. It's not going to affect, luckily it's not affecting his loan.
Yeah.
But it could in some
Yeah.
other instances. And so kind of getting all that stuff cleared up and really having a 60-day window to clear that stuff up is really beneficial.
Right?
No. Credit companies and credit reporting is a slow, it's a slow process.
Sure. So if you, especially because there is a difference for some borrowers, the difference between a few points could make a pretty big impact on qualifying for the house or how much your mortgage is going to be, right?
Yep.
So so definitely clear that up. I know we talk about that a lot, but I think it's worth mentioning because I think some people just kind of, it's fine, my credit's fine. But
Yeah. No, I mean, like the credit score can affect your rate.
Yeah.
And then also if you have debts on there that you're not aware of, then that
Yeah.
can affect your debt to income ratio. And if your debt to income ratio doesn't work with whatever loan product that you're trying to buy, then we have to figure out something else or take care of the the issue on the credit report.
Sure, or make a plan for reducing that debt. So say you don't want to buy until next year. That's not too early to pull it because you can decide, okay, if I get rid of this debt, do I have this money to save for my down payment or to get rid of my debt, which is better?
Yes.
You know?
Yes.
And so making that decision.
There's a program that I have that I can actually run people through and pull off debts or decrease debts and see what that's going to potentially, how that's going to impact the credit score.
Okay.
So if somebody is, say, below a 720, say they're 718, 717, 710, whatever it is,
Sure.
below 720, well, if we have enough time, I can get somebody above 720, that's going to improve their rate.
Wow.
Yeah.
And
that
matters a lot. So so
do the work up front.
Do the work up front. Yeah. It's worth it. And you can start saving for that down payment. Or if you're already in that place, buy if you see the right house, because the giant answer is we're not quite sure what 2025 is going to bring, right? I mean, cautiously optimistic, but we don't know exactly what rates are going to do, right?
Yeah, we don't. I mean, there's some big things that are on the table that could increase or decrease the inflation, depending on which expert you pay attention to or who you listen to.
Yeah.
Inflation's going to impact home building, and so we already are in a supply shortage. We have been for a long time.
We have,
builders aren't able to make up that supply difference. They are chipping away at it. It is getting better, but it's still not there. Well, if inflation goes up, costs of goods go up, there's going to be less builders building, they're not going to be building like crazy.
Yeah.
And conversely, inflation goes up, we'll probably see an increase in rates. Inflation goes down, we may see some more building. That impact may not actually be till 2026.
Okay.
Lots of builders, buy their land the year before and then build the next year. But if they're optimistic and they're willing to put their money down to buy more land, they're willing to build more.
Yeah.
So it's cautiously optimistic, but wait and see kind of approach.
Okay.
But the biggest takeaway I would say is if somebody finds the home that they like and they can afford the payment for 2 years, just go ahead and do it if it makes sense for the family and all that. All the other things considered,
That's good advice. All right. Well, thank you for sharing that with us. My name is Monica McCarthy, a realtor specializing in Salida, Colorado. This is Jess Fisher, a mortgage broker here. The contact information for both of us is in the description below. Please reach out if you have any other questions about buying in the Salida, Colorado area. And I appreciate your time. Thank you so much for watching.